Okay. Yeah, my bad. I didn't start a recording. I didn't, my bad, guys. So no questions in the chat, really. So since we're going to be putting this on YouTube, I'll just repeat what we just did here for the guys who joined late. So the model we're talking about is simply this. We want to find a range that's created here. Then we want to see both sides of the range get rated. So the liquidity that's above here, liquidity that's below here, we want to see both sides of this range get rated. Once it's rated, you want to refer back to the price action inside this range. Like that. Looking for a buy signal right there. Now, it's important to point out the fact that at this blue line, I probably should change the color of that blue line and put it as a black line. So this line right here, what's important to understand about this entire model is that at this price level, where that black line is where I'm expecting price to be sensitive. Okay, we're expecting price to be sensitive right here. Now, this is going to be the difference between predicting price action and anticipating what should happen. If you expect this price action or this price level right here to be sensitive, there are a couple of things that can happen. All right, let's put a line here and say we're anticipating that specific price level to be sensitive. When price is coming back, one of two things can happen. We can trade to the level like that, and then a wick gets formed, and then we move away. Perfect. If this is a down candle, then we'd anticipate being a buyer when price comes back there. So when the next candle comes down, that trade idea becomes easy. Entry, stop loss, that kind of idea. Order block, ICT order block, everybody knows that. That idea here is perfect. Now, what's not perfect or what's not going to be ideal sometimes is the price level that we expect to be sensitive is right there. Then price comes down and it closes below it. If price closes below the price level you're anticipating to be sensitive, you have to allow yourself to get more data. You have to. So either price is going to come back up, hit that level, and then trade lower, or it's going to do this, and then this candle might just break higher. And then it becomes whether you feel comfortable accepting the risk in trading this order block. Now it's starting to get a little bit crazy. So when price comes back down here, are you comfortable buying here with your stops below here in anticipation of a rally? Or are you going to allow price to react more and give you more data at this point before you take an entry? Depending on your personality, that answer might vary. Well, let's clear all of that. So that's the model that we're looking at. All right. Range being created, range being rated, price trades back to the range. We're looking for entry patterns, type 1, type 2, any confluence you want to find, higher time frame, lower time frame, whatever it is, you can build your own trading model around what you look for after the range gets rated. All right, let's scoot back for another example. And again, for the persons who are just joining, I am cherry picking these examples because this is an impromptu thing. Let's see if we can go to a higher time frame. Maybe that will give us more setups. So no, this is going into something else that not about here. So if you do see any setups, feel free to point them out and I'll take a look at them. This looks like a diagonal accumulation. So we might have to factor in time or day to get that. Any range, or you're looking at a specific time frame. So just to highlight the model, I wasn't looking for a specific time range, right? I wasn't planning on giving you guys everything, but since you brought it up and feeling generous, let's talk about that. So let's grab midnight New York and let's grab 8 p.m. This is typically the range I look at for Asian range. This is clearly one-sided. If Asian range is one-sided, I think I've shared what I do in these cases. Asian range, CBDR range, whichever you want to use here is that's up to you. That's your preference. That's your personal preference, right? But for this example, I'm only using Asian range. So again, there's an Asian range there. Let's zoom up. Now that you've included time, I'll have to be precise. This right here, highest candle body in the Asian range, right there, yes. And this right here is the lowest body in the Asian range. So I have my box around those. All right, so number one, the low of the range has been swept. We have price closing below. Number two, we have price closing above the range right here. So once that has happened, both sides are now swept. You can start anticipating a reaction. Now again, since you've included time, precision must be observed. That's the range right there. This is the midpoint right there. Take the fib off. And for me, it's a 50-minute chart. So while this wasn't a part of what I wanted to talk about, I wanted to look at what happened here and how there was an order block created. Price broke above it. Very early confirmation. Nice move. Price came back to that level right here, and we closed below it here. So because we closed below it here, you're no longer looking for price to be bullish unless price goes back above this candle that closed below the blue line. It didn't. So now your bias is bearish. You can all see how that would have played out. Look at the day before. We have midnight open and Asian there. Let's grab that line. That's the high of Asian right there. I don't use this candle as a high because this candle is the start of the first 15-minute candle after midnight. So I'm looking at the bodies before this black line. And then here. So again, we have the high and the low being swept. Was there any retracements back? Yes. Here's the midpoint. Let's move this line down. There. Let's see what we got. So price didn't get back to that price level until a couple of days after. And we broke below. So it's the same idea I was saying, where breaks below, comes back up, taps it, and then it moves low. But this blue line is that price level we anticipate to be sensitive. And I'm sure you guys will look at this and find some confluence here. I'll leave that for you. The day before, we have our Asian range start there and our midnight right there. Same idea. High and the low. This is price trading below it. Did it go back above? No, it didn't. So no setup. Chart is getting a little bit messy. Let's clear it up. Let's switch to another pair. GJ. So if you are looking at trading the Asian range specifically with this model, you easily start seeing context. What do I mean by that? Now, if we have the range here that we expect price to raid, right here. Again, if Asian is one-sided, I get very skeptical about trading London. So no ideas there. No trade ideas there. Nothing there for me to do but look at another pair. All right. So if you do this across, I don't know, any amount of pairs that you trade, your setup becomes a lot easier to see. You know where you want your entry to form, and if you don't see it, then you move on. It's that simple. You don't force setups anymore, and when you actually find your setups, then you milk them for all they're worth. All right, this looks like a very tight range. So high, low, low gets swept, high gets swept, fib, midpoint, blue line, take the fib off, looking for a reaction. Price breaks lower here. So unless price stays above this, we're no longer bullish. Comes back up, comes down here. This is now a bearish order block. Again, this is hindsight cherry picking, but okay. It's your order block. Price comes there. This is what 156.9. This is 156.4. So 50 pips were offered here by just looking across multiple days for the same setup. So if you want to call these levels key levels, putting up my two fingers for quotation, you can do that. You start identifying levels that you expect a reaction to form. If you don't get the reaction that you're looking for, walk away. That's it. Walk away. For the very risky persons, you're going to try to find early entries, and sometimes you're going to find them with the right confluence. Sometimes you won't. If you take a loss, just move on. Manage the risk. The day before, same idea, looking at same pattern. When it's easy to trade, we trade. When it's not, protect our capital and our mental capital as well. Price trades higher. We didn't come back down here, so no need to force looking for anything there. Nothing happened there. This is particularly helpful if you're trading a consolidated market. Hint, hint. And then we have, let's here. Oh, Zoom telling me that I'm running out of time. That's fine. So again, Asian range there. We have the high. We have the low coming in at this down candle here. Low being swept, high being swept. Inside here, grab our fib. Here's a 50% at that blue line. I don't think we've gotten back down here as yet, so that's fine. Here, didn't touch the blue line. Again, you can look for your confluences here. I'm already seeing from this low to that high a sweep of this low right here. And while it is cherry picking, let me just show you what I'm cherry picking. On a lower time frame, this is going to look like this. That's what it's going to look like. All right. We can hop over to a lower time frame just to, that was January the 3rd. Hopefully it doesn't change. Okay, cool. January the 3rd. What are we looking at again? Somewhere over here. So this is that pattern I said would look like this on a lower time frame, where there's a low, then the high. So your entry is when price reads that low, right? Making the line as straight as possible. Cherry picking, but not fabricating, right? So this low here is where we look for our entry once it gets rated based on a type 2 setup. I don't know why it's not tapping. Oh, take this. That's where you look to get rated. That's your entry to go along. So now, what I said when I started the video before the recording was, this blue line is not where you predict anything. It's where you anticipate that something should happen. You don't force anything to happen there. You literally wait for information. So you know the price range or the exact price, as a matter of fact, that you want your setup to form, right? In a perfect world, the price will tag this and then it will move lower, or it will form an order block right here and then it will move away from the order block, right? In a not so perfect world, you have setups like this forming, where the blue line is there and the setup forms, this is like what, 6 pips away from the actual price level, but there is context and confluence why that is permitted. Also London low of the day and then after the races. All right, so again, whatever confluence you can find to blend around that, I leave that for you to decide. No chasing any setups here. Really tight range. This could be very nice. And the high. We have the high getting rated here and the low getting rated here. Price breaks through right here. So we know that we're now bearish because price breaks through here. And here is something that most traders struggle with. If you know that when this down candle closes through these lines, I may have been confusing somebody with all of these lines, so let me just take them off. If we know that once price closes below here, we're bearish and we're waiting for price to trade back up to get an entry, can you look at this price action here and see where, one, you can get an entry, and two, where the best possible entries can form? Should be pretty easy to see, right? Order blocks, imbalances, all of these things happening up here. And as usual, GBP JPY will tag you if you're stingy with your stop loss. So to survive trading GBP JPY, you will need patience. You will need a lot of patience. Somebody's saying hi in the chat. Hi. So yeah, all the confluences you want, you can find them right here. No big idea. As an ICT trader, I strongly suggest blending any ICT concepts you can find around these setups, and they make them even better, right? One gem that I'll leave you with before next 4-minute ends is, whenever price is trading in a range and you have clearly outlined the range that price is trading in. So let's say this is the low and this is the high. So let's say that we identified this as a range that price is trading in. We have a clear high and a clear low. So for breaks in market structure, we need to see one of these getting broken. Yes, fair enough. We need to see one of those getting broken. So if this push happens and it does not take out any of these highs, you cannot be expecting to be bullish here. So this is what, you know, the word inducement, if you want to call it that. This is where inducement is happening, where this low is going to be an area where stops are going to be pulled, because there is no break in market structure from this low. It's just a retracement. And if upwards or there's a bullish retracement, the order flow is bearish. So these lows will get taken. So here we can see a good example of quote unquote support being engineered and then raided. Once this gets raided, again, I like to go back to where price was trading before the stop raid, because you know, stop raids are usually manipulation. But there are different types of stop raids, but it's not something to talk about here. These are the lows, they get raided. We're looking back over here for where are the areas that price could trade to. You can find a lot of things in here that you can use to justify an entry. I shared in the group chat some time ago rule number 1 to my entry model. Rule number 1 is any order block candidate that I'm going to consider must produce a swing that breaks structure. So look at this order block up here that did all of this noise in here. Did it break below here? No. This order block didn't produce a swing that broke below a previous low. This order block here created a swing. Did it close below here? Yes, it did. So rule number 1 is now met for my entries. So I will not take a trade until price comes back to this order block. Or if I'm, you know, awfully bearish, this is the order block I want to use for my sell entries. So there it is. Then it moves low. Did this swing, or did this small order block here create a swing that broke below a previous low? Yes, it did. So this is something I can consider as well. Random. That's how rule number 1 comes into play. And with the last minute I have left, I want to say thank you guys for coming out. Hope you enjoyed my TED Talk, and I'll see you in the chat.